Let's talk about the health of consumer financing right now, as far as it's concerned with repos right now, repossessions in the marketplace. Jim, I'll hit you first.
Yeah, we talked about it a little bit before, and repossessions at this point are up over last year, really up over the entire COVID period, and they are about pre-COVID levels. So no yellow flags, no red flags, et cetera. So I think it's in a healthy state. One of the things that the banks have struggled with over the last several years is regulation and some of the crazy rules that have been implemented to quote unquote protect the consumer that really make it difficult to be a bank. And at some point in time, if your life becomes really difficult, you're either going to stop lending or you're going to raise your rates, et cetera, to be able to compensate for it to the extent that regulations allow you. So, we haven't seen too much of that yet, but they were feeling that pressure. One of the good things about repos, I think, over the last couple of years especially, is particularly with the things that we've done working with them and have been in the industry forever, is getting better at the repo process. So part of the repo volume uptick is lenders being more successful actually recovering units. So the recovery rates still aren't back to where they were a decade or so ago, but they're way better than they were during COVID because the repossession network basically got decimated during COVID because there weren't that many of them and people got PPP money and then went and did some other things, et cetera, et cetera. So that's good news. I think the processes that banks have to recover their funds so they can keep lending are improved, and they're not in the yellow zone yet on losses. Now, if the economy does do more than soften this year and actually goes pretty far south, then those losses may cause those lenders to pull back a lot more. They're a little conservative right now, but they basically just tightened up their standards. If we see what we saw during the financial crisis of people not lending on pre-owned anymore or just making massive changes, that will have a direct impact to the industry. So I don't see that happening personally. And I think the lending industry overall is fairly healthy right now. But it wouldn't take much to tip the scales.